The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. We have a major announcement, boys and girls. I've been impressed by, or been infected by fake news. I told you yesterday that there was a lead article on the front page of Apple. I was misinformed. I didn't check it. It was only an article about Apple in the major section, but it was not on the front page of Apple. So I just wanted to bring that to your attention. Okay, this is an anniversary date, boys and girls. Not many people remember this, but this was the top of the stock market on August the 25th of 1987. And I think I should bring this to your attention just for kicks and giggles here. But let's take a quick look. This is what it looked like. This is from my book, Astro Cycles, The Trader's Viewpoint. I'll get this up here so you can take a quick look at it. We'll get it over here. Now, this basically shows that you see where we had 5 planets. And they were actually, really, you can see August 25th, I believe it was a Monday, and Arch Crawford was calling for a top that. That was called Harmonic Convergence is what that was called, and it's a big deal. We happened to be on early in about the middle of August, around the 14th or 15th. Arch and I were both on Bill Griffith's show in Los Angeles at FNN, Financial News Network, and we were talking about this major top coming in here. And then, of course, the market topped and then went down into September the 26th and rallied up into October the 2nd. And then from October the 2nd to the 19th, it dropped 33%. The last day, the Dow dropped 16% in one day. So it was a big deal. So I don't know, I'm just bringing this to your attention because it happens to be an anniversary date. Frankly, have not seen any correlations between anniversary dates at all. All I know is it's 33 years, since that time. So, whether that's going to mean anything or not, I don't know. I'm just bringing it to your attention because it happens to be the same type of a pattern that we're seeing here, only reversed like what we're looking at from what we had in 2009. But this one in 2020 is not working. I mean, we're out 6 days from where it should have turned, and that's a very, very unusual event. So let's remind ourselves that things change, but sometimes they remain the same. Let's talk just a tiny bit about what's happening in the Dow Jones Industrial Average. I posted the charts for the FTSE and NASDAQ, but we need to talk about what's going on here in the Dow Jones Industrial Average today, folks. They've taken out 3 major stocks. I believe it was Pfizer and Exxon. How can they take out ExxonMobil? I'll just okay. Let me go. Let's talk a little bit about the Dow Jones Industrial Average as a commodity. When I first got to Chicago in January, it was February of 1982. They started trading the S&P in April of 1982. When I first got there, within the first 2 weeks, I met a young man named Byron Tucker. And since that time, Byron Tucker has been my best friend and has remained that. We talk 3 or 4 times a day. He was going to be on the show today, but he's in an area where they don't have any type of electricity or anything. He's up in the North Woods vacationing. But he was involved with Leo Melamed. Byron had ran the desk for Goldman Sachs. And what happened was Leo wanted him to work for Delshire, which was his company. And, of course, working with Leo was an honor. And so he had became on the board of directors of Delshire. And what Leo tried to do was to try to get the Dow Jones Industrial to be the number 1 thing for the stock indices. This was about 2 years earlier. The problem was, folks, the Dow Jones family. It's a family. That's Dow Jones Company, but there's a Dow Jones family in that makes the decisions. They're on the board, and they're still on the board, and they don't make very good decisions. They couldn't see any of this coming with financial stuff, and they tried to, Leo did everything he could to get the Dow Jones as the number one, stock index, but they couldn't. One of the things that Leo insisted upon was the fact that to make it a cap weighted instead of price weighted. He said they didn't understand. They actually did not. I better shut up. Anyway, the thing happened, and so nothing happened, and so the S&P folks, yes, they wanted to do it, and so it came to the Chicago Mercantile Exchange. Secondary to that became the NASDAQ, which was part of the Chicago Board of Trade, and then also the Dow E-mini became, or the Dow Jones contract became with the Board of Trade. But by that time, the S&P had taken over. The knife was still in New York, but it was not doing very much. It was a little bit better than the NASDAQ, because remember the NASDAQ didn't start until '73, and so it wasn't really a big deal at all. They didn't have tech stocks like we have now. So that's how all this stuff comes. But now what they're doing, here's what's happening now. They're taking their number one stock, their big daddy rabbit, and because Apple split 4 for 1, it used to be the most valuable company in the world. It is when you cap weight it, but when you price weight it, it's now 1/4 of the price. They've taken their, they're being hit because they don't understand, the mechanics of finance. I guess I don't understand how. And to take Exxon out, that was the biggest for years, and it's still big. It's not like General Electric. Anyway, that's neither here nor there. So I just wanted to bring that much attention to you because I was listening to the stories behind it, and I got to be friends with Leo, along with, of course, Byron and I are good friends. But I heard the stories, and the Dow Jones family just wouldn't make any decisions on it, and that's probably that's the main thing to pay attention to as we look at some of these things. So that's neither here nor there. Okay. One of the questions someone asked me is about the stock market, what I think is going on. I'm going to give you my 2 cents worth at the break here. By the way, if you folks are going to sign up for my show for tomorrow, which is all-day trading from 9 to 2, I'm going to throw in a $200 bonus that you can't miss. We're there to make money. We're going to definitely try to make our $295 fee. We're going to definitely try to do that. I'm not going to be using, the really heavily leveraged things like, where you have to put up $15,000 or $20,000. We're going to use smaller things like bonds. We can use mini gold, mini crude oil, and stuff like that. But you are going to be able to do it. We're going to be watching beans and wheat and corn because all these are starting to move good. So we're going to have some pretty good chances, I think, to get in. But there's going to be I'm going to do some serious teaching, and I'm going to share some things that you folks have not seen before. You've been dabbled in them a little bit, but I'll give you some more information. But last time we did it was a lot of fun. We made well over $1,700 in the 5 trades that we did, and everybody really enjoyed it. And I know they did because some of them are doing the show again. Let's take a break here, and then we'll talk about the stock market. 877-927-6648.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, before we get started with the stock market here, I'm going to go back a little bit to that 1987, and you can compare what happened to 1929 on these numbers of days. I'm going to be following this. I know Basil does also, and so does Steve Rhodes, but if there's going to be something like this happening, we're so far away from that right now, it doesn't even count. But it'll give us an idea because these markets do repeat over and over again, and so we want to watch that repetition. So let's just get right back to the NASDAQ, because I wanted to, it's been running the market from the very beginning. Let's get this up here from back in 2009, actually. But you'll notice here when we bottomed here on July 24th, we had that little bit of a 10% correction there. And then we made the big ABCD. We've made the ABCD in time. In other words, I'll show you this in just a second. But you've made the ABCD in time. We have not made it in price. All we've been able to do from yesterday's high so far was to make a 78% retracement. We've sort of rolled over from there. But the key here is to show you over the past 6 weeks how accurate the fib numbers have been. From your low to low is exactly 382 that came in on August the 11th. Then you had another exact 382. You can see that it's absolutely spot on, that came in on August the 20th. And that was the day after we had that, the 19th is where we thought it was going to top. At least I did. And of course, I was wrong there. But then we came down. We made another 382 retracement on the 21st, and then we shot up. And we did complete that ABCD, but we have not completed the other one at 11,850. Whether we do that or not, I don't know. But let me just share with you what the time sequence looks like as you're watching this. Now remember, I'm a technician. I don't follow the stuff that's going on and all that other stuff. It doesn't fit into what I have to do, because I have to figure out how much I have to risk if I want to do anything. And if you'll notice here, I put these cycles in. This is just a simple cycle tool that's in the Ensign program. Almost all of these programs have it, but you'll notice from the 24th of July until August the 6th, that's how many days the market went up. It went up 60 trading in hours. Excuse me. This is a 4-hour chart, so it went up 60 4-hour bars. So that basically, that covers about 10 days. Have you noticed when we made the low on August the 11th, where we come in today? Exactly where we were yesterday at the high. I mean, that was at 17,000 and change. So that tells me that this time and price, time has completed, price has not. And W.D. Gann said, time is more important than price. Whether that's true or not, I don't know. All I know is that we've had a parabolic move in the price of the stock of Apple, and a whole lot of other ones too. I mean, this literally, I didn't even put in yesterday's, but you can see where we were coming into Monday, and we got all the way up. We were looking for a high of around 509, and we got to 516. Then we've rolled over. We're below. I think we're right around $500 right now. We've got a big gap there at 82 again, which will be an interesting one to look at. But that is a parabolic market, and these markets, folks, when they go straight up, they don't always come straight down, but they have a tendency to do that. So pay close attention. There's a statistic that just absolutely blows me away, and that is when you look at these Dow stocks that are up there. I think that our good friend Rich Anderson put this up here for us. We'll bring this so you can take a look at it. This is the new Dow Jones Industrial Average. Folks, there is not one stock there that was there in they're all gone. I mean, the last one was ExxonMobil, and I think that's gone now too. So it's just amazing that these are the original Dow stocks. Of course, they were all gone, and of the original, I remember that 16 of the 30 went bankrupt during 29. American Telephone and Telegraph, was the biggest one. Now look at the weighting now of Apple. It's halfway down the list at $125 a share. United Healthcare is now almost 3 times the value of the Apple in the Dow. And then look at Home Depot, Amgen. I mean, this is not fair to Apple, and it's not fair to the investors. It's just not very, very smart to do something like that, because it's not what it's all about. It's not the price. It's the capitalization of these things. It's the money, boys and girls. That's the bottom line. You got to take price times the number of shares. I hope that makes sense, but maybe it does, maybe it doesn't. Now, what does all this mean? It all means that I think that the leader of the pack, the NASDAQ, may be topping up in this area right here. Now, if we make a new high, that 1117, if you read the newsletter, that was a 1 standard deviation up, and it was also a 1.618 expansion, as it has been before. They've just keep increasing, but we made the final one at 117 and change, as Dudette kindly pointed out to us yesterday as she was selling. But this is what it could possibly be. This is a situation where you can try to pick a top, because you have a very, very defined place to know if you're wrong. Because if you get above that 3450 level, I think the high so far has been 3449 in the S&P. If you get above 3451, that would break the sequence in the S&P for sure. And of course, if the Dow Jones, if the NASDAQ turned and went above the 117 again, that would also be a situation we're going to go. And it could happen, because these markets are running parabolic. So that's whether that's right or not, I don't know. But that's how I try to look at it. How much do I have to risk to see if I'm going to be right on this? Because if you are going to be right, and it does turn from here, it's going to be quite nasty. Now, I know there's Mr. Powell is going to be speaking in Jackson Hole on Thursday, and he's got some ideas about bringing inflation back. that's what we need. Nobody's working, and so they're going to increase all the other stuff besides food and all the other things. So we'll be able to look at. One email that I got was asking me, how do I explain how these stocks have gone up in midst of all the bearish news that we've had? And folks, I have no idea. All I know is that stocks do climb a wall of worry. But, this is certainly a different time. We've never seen anything like this. And that means that anything could possibly happen, and it usually does. And you can see the market has been following I know there's Fed juice out there, but look what's happening with look what's happening with the way the market responds. It goes right down to these numbers, 382, 618, and then expands to 1.27 and 1.618. That's what I'm looking at. So those are just little simple tools that tells us, that's where we're really looking at it. So I don't know, but that's my 2 cents worth, and I'm sticking to it. We've got some movement in the grains we want to talk about when we come back from the break. I've got a little bit of an allergy thing today, but it's going away. I'm feeling much better. Take a little drink of water here. We'll be right back after the break here, but hold on one second.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're going to talk about some soybeans in here. We want to thank our friend Mr. Z here in the room, because about a month and a half ago, when soybeans were knocking on death's door, he was getting quite bullish, and it's had one heck of a run, and we've had a big move here. And as you can see here, I posted the daily and hourly charts that we've had a really strong move up here in beans, that has surprised a lot of people. But the weather is hot and dry in some of those areas, and other areas are getting too much rain, so this is part of it, get a problem. But it's not running away, folks. As you can see from that hourly chart, just the last day or so, that's had a nice run up, but it hasn't gone limit or anything like that where it goes crazy. However, it's starting. It doesn't take very much from here to get it to go crazy. It would really be an interesting one to see that, give you up another 20, 25 cents one day. That would certainly stimulate it. Now, there's talk, of course, about the Chinese coming in and talking again. Here again, I don't believe any of that stuff. I think you can always tell a politician is lying because he's opening his mouth. All right, let's move on to one other one that looks real interesting here. If you like Fibonacci numbers, and I know some of you do, let's take a look here at the soybean oil. This is a daily chart of soybean oil as of yesterday. You'll notice that blue line there at 32.40 was an exact 61% retracement. And if you were able to go down and look, let me draw this in before we get it, you'll be able to see it here where we are, and get this up here. Take a quick look at it, and then get it up here. Here's a hourly chart now, and I want you to notice the top of that market there where the three drive pattern finishes exactly at 32.40. We've already dropped down about $300 from that high, but that is a three drive to a top pattern. So that in a very strong resistance at that turn 32.40. So if you're watching for a weather market in the beans, and remember the oil is only 20% of the bean. It's 80%. Actually, about 75% meal and oil, and then the other is a little bit of residual stuff. But it's mostly meal is 80% and oil is 20% roughly. So if the oil takes off, that means that there's other problems in other countries like India and places like that where they have palm oil and other places. So anyway, that's what we're watching here in the oil. So that's a very important number to pay attention to, 32.40 in the December oil. And if it gets above that, that tells it it's going to go a lot higher. But right now it's up against some pretty strong resistance. And the reason why I'm bringing it to your attention here is because the news is very bullish. The moves have changed. The mood has changed. So that's a main thing to pay close attention to. Hold on here. I think I got a message coming in. Don't know if it means anything or not. Okay. All righty here. Let's just move on here. What's going on? By the way, another reason for the reason on the stock market, if those of you that read the newsletter, that the odds dropped for a market high. In other words, they increased. In other words, the odds of a market high 2 weeks ago were like 18-1, but this week when you came in, it was 7-1. And the reason why is the market had begun going up and hitting the standard deviation numbers, but they are dropping. In other words, they're not expanding. Well, they were in Apple, but everything else, they were not expanding. And so that was telling us that the odds of a top coming in here were pretty high because the interest and prices going higher from the buyers. In other words, not many buyers coming in, and we're seeing that in open interest for sure. You had big runs in this S&P and NASDAQ over the few days with drops in open interest, and boy, that certainly isn't positive. But whether that means anything or not, I don't know, because of the ETFs. The game's changed. Look what they do to the Dow Jones today. Shut the front door and raise the rent. Hold on one second, folks. I need to take a tiny bit of water. By the way, if you have any questions, 877-927-6648. I know the phone is off the hook right now there at TFNN because the lines are all lined up. But if you keep trying, you will be able to get through, and I'll try to answer my questions or answer your questions the best I can here this morning. Okay, Apple is down on the day. Shut the front door and raise the rent. How could that be? The key level is the first gap there in Apple is at 480. There should be some pretty strong support at 480 in Apple. And then if we start, folks, when Apple is finished, things that go up like that come down just as fast. All you have to do is go back and look at some of those charts. I mean, remember, Apple went from 380 down to 120 a few years ago. So it could really have maybe a 3 or 5% correction, for heaven's sakes. Who knows? All I know is that when you're parabolic like that, you have a tendency to forget that markets can come down, and believe me, the emotionalism that was there in the markets this past week, and especially yesterday, it was really amazing to see that occurring. So, I hope that gives you some insight of what I'm looking at. But I'm just looking at numbers, folks. I'm not looking at any news item of any kind, and I try to stay away from that mainly because I don't quite understand it. In fact, I don't understand what Mr. Powell is going to be talking about on Thursday about increasing inflation. I mean, they've done everything else. They printed money till there's no paper left. So what are they going to do now? I mean, I guess they'll make interest rates -6, or maybe they'll pay you to buy a house like they do in one of those countries over there. I don't know which one it is, but I think it might be Finland or something, where they actually pay you to buy the house, which is not a bad deal, right? So you got a positive rent. Okay. Here's a question from someone. How about the Microsoft? The Microsoft that we didn't quite make the 1.618 expansion in Microsoft. Let's take a quick look at that on the charts, because it's a nice one to look at. And I get this up here. We didn't quite get to 220, folks. I don't know where the exact high was in Microsoft, but we did not quite make the two. Oh, I better double check that, because that was a big day yesterday. But I don't know. Does anybody know whether Microsoft hit 220? That was the long-term 1.618 expansion number. I'll have to pull that up at the break here, and we'll see if we can get that going, and then we will continue on with some of these other commodities like corn, and we'll take a look at soybean meal, because that was a big move down off that double bottom. So it did not. Thank you, Tommy. Appreciate that, but it didn't quite make it. Let's. What I'll do is let's just do it right now. So I've got my mind on it. I got the chart right in front of me, and I should be able to see it pretty easily. Here it is, Microsoft. Put this up here. And no, we got to 218 is all we got to. And we're actually at 213. We didn't even take out last week's high yet. So that's a tiny bit of sign of weakness. But again, very, very little. So we'll be back just a minute. We're going to talk a little bit about copper, because copper's had a pretty good run here, and it's holding at a pretty good level. So we're going to keep a close eye on copper when we get back from the break. I'll put the chart up so you folks can take a look at it, and then we will take a look at it here. Okay, there's what we're watching here in the copper, and we've got the break coming up now, I believe, and then we will continue on in just a moment here. I've got the time messed up. Okay, we'll be right back, folks. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I posted two charts, the weekly chart of copper and also the daily chart of copper. The reason why I wanted to do that is you'll notice when we looked like we were having a weekly breakout in the copper chart that was basically a false breakout. It went up and made a high of about 2 cents above the previous high, and then, of course, reversed, and that's usually a negative sign. So you've got to be very, very careful here being long copper, because you don't want to get trapped in a big down move, because it had a straight up move of about 15 or 20 cents, and about $1, and then we will see whether it's going to back off to the 382 or not. But you got to be careful on those breakouts. You can buy them, but you've got to get continuing on, because if they go back below the breakout area, it has all the earmarks of a false breakout, and you don't want to go through that. Let's take a quick look here at the wheat market. That's been relatively good to us, thanks to our good friend Mr. Z once again. He pointed out some of the fundamentals that we were having on wheat. This was about 2 weeks ago. We had Rich Anderson on, and we were showing some pretty good support there at 497. The low was 496.5. We actually tried that at 510, if you'll remember, and we put a $200 stop on that. Got stopped out. Tried it again at the 786, and that one has paid really good dividends. And now would be the time, because we're at the 61% retracement now, folks, up at that 540 level that we hit Friday, and we didn't quite make that new when the rest of the grains were going up overnight. We didn't quite get that high. We only got to 537. So you want to be out of your long wheat here, even though the bullish things, the weather looks bullish. The market is not really reacting that well yet. I mean, maybe it will later in the day, but you'd think with the news coming out that you'd have something really exciting happening. And here's where you use market feedback and try to decide, why aren't people in there buying it? And the reason is maybe they think that it's overbought, or maybe the news is possibly wrong. The weather could be wrong, which it is half the time anyway. So those are just some of the things that you want to look. You can always go back in and rebuy it. That's the main thing, paying attention to what we're looking at. Now let's talk just a tiny bit. We've got mainly those commodities on. One other commodity I want to talk about that has been relatively good to us, of course, has been the hogs. They've started to move pretty good, and we think we're going to still go higher in the hogs. And if there's inflation that they're talking about with Chairman Powell, then I think we're going to see hogs at least another 5 to 10% higher in that hog market, and that would be a very good one to look at. So we'll see how we get moving here this morning. Okay, now let me take a quick look at what the markets are doing. I have to make some corrections here, and then I have to get back into my program so I'm able to see what prices are doing. And you'll give me 1 second, and we'll see how we're doing here. Okay, all right. Well, the S&P's down to 34.31. See, the NASDAQ is not down some more. But it could be that the markets maybe had a little bit of a correction coming in here, but it's still early. We won't be able to know that until a little bit later. The one that's really interesting today, folks, from a technical standpoint, that is extremely overbought and is ready for a, let's just get this one up here, because this is this one is extremely overbought, and it needs to get ready to, have they switched over to the December now? Hold on 1 second. I think there's a problem. Just a second here. I don't think they're into December yet in the bonds, because I didn't get notified. Hold on here a second here. Have we switched over to the December bonds yet? I don't think we do that until Friday. But maybe they did it early this time. I don't know. But anyway, you'll notice here we made that 382 retracement up there in the Treasury bonds. And now I know they haven't. This is this is an accurate chart. They haven't switched over yet. So I believe we're going to have some strong support here at the 177.16 level in the September bonds. You know, that's down from the high at 183.04. Now, what Mr. Powell is going to talk about on Thursday, it most probably is going to affect the bond. So unless you have nerves of steel, I would be out of that market right before he's talking or while he's doing it, because you don't want to be on the wrong side of something he might say. But if you have a strong opinion and you think you're right, then go for it, because this chart in the, let me bring it up here a little clearer so you can see it on a little bit bigger basis here. This is a flat out bearish chart, folks. I mean, you had the high up there at 183.06. That was the 78% retracement. We had a 3 drive to a top pattern there, and that sets up an ABCD for another, you believe it or not, another 5 points down to 174, 4 points down in the bonds, and that would be down nine handles from the top. So that's a big deal. Someone's got a question, is how do you trade crude with the Gulf closed for the hurricanes? I just trade crude. You know, I don't pay too much attention to the hurricane stuff. If they get me, they get me. I just watch the numbers, David. I really don't care. In September of last year, we were giving a seminar with Tom Hugard over in London, and that's when the drones hit the Saudi Arabia oil fields, and the crude oil jumped $9 that day, and we were in the midst of trading. And I said, you know, this is at the 78% level. You've got to take a shot at going short here just because of the 78% level. Well, we sold it, and it dropped $3 all during the day. And then at the end of the day, after the trading was over in the aftermarket, the market went right back up to the old high. It was around $69 a barrel, if you can believe that. And from $69 a barrel, it went down to $6 a barrel. So I don't really pay attention to the news. I watch how it reacts to it. That gives me an indication, yeah, there's something there, because people smarter than me are going to be in there buying or selling, and that's what I want to see what they're doing. So I don't think there's anything bullish about the crude oil chart. There's a chance it could get to 44.30, I believe, in the nearby crude. And if it does, that just completes a 61% retracement. So that's what it's really looking at. I believe that when Mr. Z's talking about the gold in here, Z, I really think we got a chance for the gold to get down to the in the 1810 level, about $110, and we're $120 from where it is right now. And I will be el cunos dos manos, as they say here on the Mexican border, means with both hands I will be buying at 1810 in the gold. If you remember, we talked about this weeks ago, and I think it's worthy of talking. If you remember what happened in 1978, and we've been referring to that quite a bit, we had that big drop from October where we went from 249 down to 191. On a percentage basis, you see that's 23%. And you see at the 76%, I think it'll be 78%. But that's what I'm looking at. I think we could get a break like that because we had too many people long up here at 2090 when the opening interest was dropping. So if we can shake out a whole bunch of folks, hey, silver's still acting bullish, folks. I mean, there's nothing wrong with silver. I mean, it looks flat out bullish. But the gold, I'd love to see it $120 lower. I think that clearing price would be a really good spot to look at it. So I'm waiting for 1810. I traded intraday, of course. In fact, I was trying to buy it today, and I missed it by a few points, but I'll still continue. I think we're going to have an up day in gold today, just from the down day we had yesterday. So we'll be right back. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I would like to put up the chart of the gold market. This is a 4-hour chart. The reason why I use 4-hour, folks, is you can see usually 2 or 3 weeks of action in there. And you can see the high we made back there at 2090, the big retracement down to 1971. We rallied up to just about 61% retracement. That takes us down to 1807. I mentioned 1810. But as you'll see here today, I was thinking old gold might get down to 1908, 1909, where I would like to be a buyer of it down in that area right there. So if that's the case, it would be a 3 drive to a bottom on this chart. That gives me a chance to trade gold with a $5 stop, as opposed to what you have to use if you're trading daily charts. You got to probably risk about pretty close to $1,500 on gold, because it swings so very, very much. We have average swings now of $20, $30 a day, so that's not unusual to see it happening that way. So that's my 2 cents worth, and I'll stick to that. Okay, now remember, we are going to have a free day tomorrow, because I'm going to be doing my show. I hope you can join me. This is what I really enjoy doing, is this live trading for 5 hours. On Thursday, we're going to have Tim Boss, the Financial Cycles Weekly. And on Friday, we will have Shane Smolian. And next week, we're going to have Stan Harley as our guest. So those are just a few that we're looking at for next week here. And let's move on here to the silver, just to show you. If I got a chance to pull that silver chart up. Excuse me, folks, a little allergies are getting me, but I'm okay today compared to yesterday. We're starting getting monsoon rains now, so it's a lot better here. If I can just find my silver chart. Where are you hiding? There you are. Okay, let's get this up here. This is just a flat-out bullish chart, folks. It doesn't look bearish at all. And if you get a retracement in this thing to this level down to 2320, that would be equivalent of what we're watching in the gold. I would be a buyer at silver at 2320. That's a long way. We're $3 an ounce from that level. So we'll see. We'll see you all Thursday, folks.